House to Home, presented by Remax Diamond Realty.
Attention people out there who have sold property, the tax man cometh. Well, technically not for a few more months, but Liz and Gina are here.
And we're always
Gina
ahead.
and Liz. And you guys always switch chairs and everything.
Yeah, I know. Yeah. We like to confuse you.
Okay, yeah, thank you. But hopefully one thing that isn't going to be confusing is taxes when it comes to people who have sold property.
Yes,
yes. What are the major dates that people need to know? Because if people have just done this for the first time, they're like, oh man, I made so much money and everything, and then, oopsie.
Yeah, and that's why we want to bring it up early, because it's one of the last things you think about. But if you sold property this year, there are some things you need to get organized that, like in our case, we sold property this year and we have had that property for quite a long time. So digging up records, it was like, we thought, oh, we're so organized, it'll just be like right there. It wasn't just right there.
So it's not just like whipping out the 1040 EZ and then, you know, jamming it out and then turning it. Yeah, this is decidedly more involved.
Yes, yeah, to dig
Absolutely.
through files.
Yeah.
So, you know, the more organized you are, the better you could take advantage of the tax benefits of owning real estate, and including when you sell and make money. If you make money, that's a capital gains issue. We're not tax people, but we like to share what little knowledge we have about taxes with our customers so that they could be better prepared to go see the tax person. So one of the things that we're always concerned about is your base. You're going to be taxed on what your base or your adjusted base or your cost basis is, which is pretty much what you bought the property for, plus additional expenses that you paid adds to your base, or what you built the property for is your base, or what you inherited the property for. So let's say I inherited the property from my parents, which I didn't, but it would be nice if I did. So let's say I inherited the property, so my base is what the value, the market value at the time that my parents passed and gave me that property. So these are important things to know, and it's not something you could just whip out of a folder. Sometimes you have to do a little bit of work. Like for instance, if you inherited the property, you're gonna have to do a little bit of work to figure out, hey, wait a minute, what was this worth when the person gave it to me at their time of death? What was it worth?
Now conversely, Liz, what about people who have sold property, like, you know, you hear people like buy a building and they flip it. They just do it solely for the intent of making money off that. They do it really, really quick within the tax year. Is there any benefit or consideration if they just do it really, really quickly? It's like a really fast transaction.
I think when you do that, there may be some bigger tax implications, because there's a window of time in terms of when you purchased it. But of course, they'd have to go to their tax consultant to get the information on what that percentage is from the base. What do they have to pay? But going back to what Gina was saying, you have to pull all your files together in terms of your expenses. What did you buy it for? What expenses were associated with the purchase? Now, it's a little different with an investment versus your primary home residence. Let's say you're selling that, for example. You still need your documentation. There are better benefits if you've been living in that home for a while, that you're given a, what is it, up to $250,000 per owner, where you don't, let's say for example you bought it for $500,000 and then you sold it for $600,000. There's a difference there. You're given up to $500 if you're husband and wife, and then the tax implication will be the difference. So again, your tax consultant can help you with that, but there is a difference between the investment property in terms of the paperwork you need as well as the selling of a primary residence.
For people who sell property, can they compile all the necessary paperwork and like do all the calculations and everything and put it all together themselves, or is it really better to go through, is it a tax professional?
Like if you're me, you wouldn't dare, because I can't add 1 + 1 without a calculator. So I wouldn't even dare. I wouldn't
attempt it. And plus your income is
it.
like 9 digits a year anyway.
Well,
so.
well, no, not at all. But you know, I like to pay professionals to do what they do best. So I'm going to save up a little bit, and especially if I sold property, hopefully I made money. So no, I'd prefer to hire somebody to do that for me.
Your tax professional will protect you, because if something goes wrong, let's say I do it, and there's a big implication in terms of your tax, how would I know? It's your tax professional knows the ins and outs of the law. And remember, every year the law changes. There may be changes that we're not aware of as a layperson versus a CPA or a tax consultant. They're well versed in any changes in the law from year to year. Without that, you could mess up your tax return.
Okay.
And this doesn't apply to somebody selling their home, as Liz mentioned earlier. This applies to, it's not your primary residence. You're not living in it, but you sold it.
I'll tell you what, can we get you guys to come back, and now we've tackled the side of the coin that deals with the sellers. And next week, if you guys are okay, I'd like to talk about the buyers and their consideration. Okay, so we'll table that for next week. We'll table that for next week. Thanks so much. And thank you guys for watching. That is our show. We'll see you next time.
Closed captioning is brought to you by IT&E. This lineup is brought to you by IT&E.